Lisa, $700 in profits on 3 stocks. Danielle, paper trading on stocks to trade, but made almost 2 grand. And some people say, oh, paper trading is not real. You don't get the full emotional education, I agree. But a lot of these stocks that we're trading are ridiculously volatile, and you have to just get used to the patterns also. So I think it's a 2-part education. And paper trading, where basically you're like using fantasy cash, it's not real money, it helps. It might not be the complete education. It's not even 50-50 half education. But I do believe understanding how to ride the volatility long or short, it's definitely a good chunk of your education, probably like 20, maybe 30%. So stocks to trade, get on this platform and start paper trading. Danielle, growing her paper trading account. Again, not necessarily a complete education, but it's a good start. So, you can see me responding and I say, good practice. It's a good way to practice. Here is Chan. I love this on SNGX, made nearly 10% today, all in 6 minutes. And this is the pattern that I'm going to be going over in a few seconds. But this is a damn good trade. And some people might say, hey, it's such small money. But again, when you have, let's say $800, $1,000 to trade with, and you can make a quick, what did he make? Like 50, 60, 80 bucks. That's good. Wall Street looks down on this stuff, but I know how important this is for, people with small accounts. Here's Ricky. And Ricky has learned that after multiple losses, he got the biggest profit. He caught the meat of the move. And he bought it, at 420, out at 490. And in the past, he was buying it at 150, selling here at 150. Eyes, actually, probably should have cut losses a little better than that. But you're learning. And now, you're rewarded with SNGX, which was today's biggest spiker. So good job, Ricky. Here's Carlos. He also did a good job on SNGX in the challenge chat room, and Mark Crook nailed it. And here's Lee. Last but definitely not least, again, just a small trade on SNGX. Bought it in the 3s, sold it in the 4s, made $1 a share. And again, Wall Street will look down on this. This is a very good trade for a small account. So let's get into this. I'm currently long NADL in the 180s. It closed at 198. After hours, it's actually up to 205. You can see this is a 10-day chart that I pulled up, and this one was a huge winner. My entire chat room basically nailed this one from the low 2s to the 3s. And, now it's come down and it's consolidated. And I'm not saying it's necessarily going to come back to the highs, but when I was buying it today in the 180s, it's the first green day, okay? A lot of people don't really seem to respect the first green day. I do. Look at this, green. If you're colorblind, I'm sorry, I can't teach you. You have to differentiate between what is a green day and a red day. And now there looks to be solid support here in the 170s. At least for the time being, and it looks like it can bounce. I love buying the first green day. This is a number 5 pattern from my Penny Stocking Framework DVD, and I'm going to have some good news about that this weekend, so stay tuned. But buying the first green day, I didn't know it was going to close at 2 and be up at 205 after hours. My whole goal was to buy it in the 180s and sell it in the low 2s. I figured if I was wrong, if it couldn't close green, guess what? I would cut losses. I would lose 5, maybe 7 cents a share. But if I was right, it could go up to where there's resistance up here in the 220s. So I thought that there was 40 cents of upside and call it 7 cents of downside. So 6-to-1 risk reward. Now, do I know if it's going to get to the 220s tomorrow? I don't know. Maybe it fails at 2. Maybe it goes to 250. I don't know specifically. What I want you to get in the habit of doing is planning your risk reward and having a conservative goal and having an aggressive goal. I should also mention, damn it, too much to do. If you go to traderchecklist.com, you will find a free 11-hour DVD, right? 11 hours right now. I'm working on the next 9 hours. And when I complete the next 9 hours, this will no longer be free. So you should actually watch traderchecklist.com ASAP before I finish the next 9 hours. I finished 5 of the next 9 hours so far. But When this becomes a 20-hour guide, you will see that on every single trade, I have at least two goals, a conservative goal and an aggressive goal. NADL, I've already sold roughly half my position in the low twos after hours today because it was already at my goals. So I took some off. It hit my conservative target of the low twos. Do I think it can go to 220 tomorrow? Yes. So there's no point in selling all of my shares, but it's good to take some off the table with these speculative volatile plays. So if you understand that, I want you to leave a comment with the words, I have two goals. And that way I'll understand that, you're getting this, because it's not just about having, one set goal, one set target price for every stock you trade. Say, okay, if I'm right conservatively, I can make, in this case, the low twos was like a 10, 15% winner. Or at best case, I might make 20 or 30%. It's okay to have two targets. It's okay to take profits a little too quickly. I do that quite often, and it's made me a millionaire. I know too many people where they get greedy and they want 50, 100% wins, and they need to learn to hit singles instead of going for home runs. So say that I have two goals. Is it I have two goals or I have two plans? I forgot what I just said. I don't even know what time it is when I'm going to post this East Coast. I'm still in Asia. I'm working around the clock here. But you have two goals, okay? Two specific goals in mind. And it doesn't have to be a specific number. It can just be, okay, low twos for me was the range. And I sold this actually during a live challenge webinar tonight. It was supposed to just be Q&A, but turned into somewhat of a live trading webinar, and I locked in a little over 1,000 in profits. Still have a few thousand shares overnight. First green day, the beginning of the pattern bodes well for tomorrow. We'll see. CBLI is a good example. This has been on my watch list ever since, this big run up, and it consolidated too. And, this was its first green day, but this one was a giant first green day. And a lot of people are asking, how do you know when to get in? First of all, for me, this stock is so choppy. I mean, even when it breaks out midday, it goes up to 520 and then it comes down to 460. This little thing would have, weeded me out. Okay? I'm not good at 60 cent, 15% drawdowns. This is too choppy for me. But if you're looking to buy these stocks, for a potential first green day, okay, NADL, first green day, but I didn't buy on the first initial spike. It spiked up midday right here. This was the big spike around 11 a.m. and it held that for the most part. It held the 180s. It didn't necessarily hold two until after hours, but you can see after hours it keeps uptrending too. But this spike and its ability to show me that it could, finish the first day green and hold 180, that was my sign to buy. And a lot of people say, hey, Tim, what about using hard stop losses? Then I don't have to look at the stock. This is a great lesson because this stock actually did crack 180, as I was telling my trading challenge students during my webinar today. It did crack 180 for about 1 minute, and it came back very quickly and kept uptrending. But if you used a hard stop to, let's say, protect yourself at like 179 or 178, you would have been taken out. Your computer automated order would have stopped you out at 178, and I would have lost, if you had been me, I would have lost like 7-8 cents a share because it technically did break 180. But the fact that it held 180 the next minute and the next few minutes, and then it gradually kept going, that tells me that this has more legs. So I don't like using hard stops. I like using mental stops. I was in this stock when it was at 180, and I was watching it very, very closely. And if I had not been by my computer and I just had an automated sell order when it broke 180, I would have lost. So I'm not a fan of hard stops, and I don't think you should use them. Instead, you have to understand this isn't an exact science, and you're looking for the gist of the stock. You're trying to find the meat of the move. And with this one, I didn't care about, risking losing 5 or 6 cents a share at the time. I'm in at 185. I care about, will it still finish green? And, literally the next minute after it broke 180, it held 180 and it never looked back. So this is a very good lesson. With CBLI, I think the time to buy, this isn't necessarily just like a first green day kind of thing. This is more of a pattern where I specifically like to buy the breakout over the pre-market highs or the breakout over the early morning highs. This one, a lot of people think, oh, you have to find these stocks that spike right at 9:30 a.m. Eastern. This one didn't really break out big. The first big breakout really came closer to 11 a.m. It had a few breakouts. I mean, it broke the morning high here at 355 and it went to a whopping 370. Boring. Okay? If I had been buying this at any time in the first hour of the trading day, I might have made 5 or 10 cents, best case. So don't be afraid that some of these stocks might not break out right at the open. This is a delayed morning spike, and I have hundreds of video lessons in my library on delayed morning spikes. So there is plenty of time to buy this, and I'm so proud of so many of you guys in the chat room. I wasn't actually feeling that well right around the market open, and I'm traveling all over the place, so for me, I have to take care of my health. I missed, basically the first hour. Not that I would have missed anything here. SNGX was the big winner. And a lot of people are asking me, when do you buy this? This is, first of all, there's positive news, but right pre-market, this is at 7 a.m. and it hits a high of like 390. Right when the market opens, it breaks 390 and it goes to 4. Okay, so you can buy this one right at the open. You just have to be willing to get out. Stock trades right near the market open can be very quick. And so this goes from literally right at the open at 4-ish up to, 460 in the first 6 minutes. So you have to be prepared for that speed. And then it comes down and then it has another breakout, another nearly $1 a share breakout. And that was pretty much it for SNGX. It was choppy. It tried to put up a fight. But the big money on this one was right at the market open. So this is why, and by the way, Tim Bowen nailed this with his webinar, live streaming webinar today. And this is why I think it's good to focus at the market open, and I think why learning from Tim Bowen is so useful. So SNGX was today's big runner, and I know I saw like hundreds of people in my chat room nailing it. I'm proud of you. IDXG, here's one that had, a big win the other day, and I actually caught this pretty nicely pre-market under 3. Okay, I was buying it in here, which turned out to be a pretty damn good entry. And a lot of people ask me questions about this. I'm sorry, I wanted to do a video like that day and then today, and I'm just running out of time. I have way too much going on, and I like that. This is what it means to be real. Some people are like, Tim, you should get organized. Fuck that, okay? I'm a fucking multimillionaire living my dream life, working on my charity, trading stocks in the middle of the night, helping students. I don't like organization. I like having, all this crazy stuff going on and trying to make it work. And even with all my craziness in my life, I still spotted IDXG pre-market and I was buying it at 3-ish. Here is where this one gets interesting. It did not break the pre-market highs of 330 until like 10 minutes in, right? So all pre-market long, it was using 330 as a top. And I did not think that it could necessarily break 330. So I sold it in the low 3s. I made like 10, 15 cents a share. I had multiple exits, okay? So I did not get the big spike that I wanted because it could not convincingly break 330. And if you were in my chat room, you would have seen me say, hey, I'm not going to buy this. This cannot break 330. Sure enough, it did at around 9:45 a.m. But at this point, there had been so many fake outs, and I know it looks tiny on the chart now, but at the time, 330 I thought was the top. So even though I only made 10, 15 cents a share, and some people were like, oh, Tim, you missed it entirely. It hit my first goal, okay? My first goal was that I thought that it might not top. It might not break out at 330. It might top there. So if it tops at 330, then I'm just trying to get out at 320, 325, 315, 310. I don't care what. I was in, to be exact, at like 297. So I had some wiggle room. But if you are unsure whether the stock can break out, it's okay to sell too soon. I wasn't angry at myself. I wasn't cursing myself for being like, oh, then it went up another $1 or $1.50 a share. Because then it also dropped. And this is a great lesson. Even though I missed out on this run up and, theoretically I should have bought back in, you can't trust these stocks. This stock did a fucking financing midday, okay? They are scummy sons of bitches. And that can happen with any stock. It's not probable, it's not even likely, but it can happen. So when it fell, and I was actually texting with Stephen Ducks because I wasn't by a computer, and he was like telling me intraday financing, and I was like, this is why I play so safely, okay? There was a huge wall of sellers here at 3 and then 310, and even though they eventually got busted, they turned out to be right. And I'm guessing those sellers at 3 and 310 knew of the financing. They didn't just pull off an intraday financing, okay? They pulled off the financing, and they were planning it for a while, and then when the stock went up enough, they announced it. So always be careful if a stock is not breaking a key level. And don't feel bad if you sell too soon. Do not feel bad at all. I don't feel bad about that. I don't feel bad about sleeping a little and missing SNGX. I don't feel bad about missing CBLI because it is too choppy. And I don't feel bad at all about NADL because this one is my current play and it offers great lessons on how not to get stopped out and how to recognize the first green day in this speculative market. A lot of people are like, okay, Tim, I'll just buy any stock. Let me see. Let me write down notes. I'll buy any stock with a first green day that's recently run. No, we're in a speculative market, okay? These are 4 stocks that have each run 50, 100, 200% in a few days. So when the market is speculative, you can be a little more aggressive. This doesn't necessarily apply in all market environments, and it certainly doesn't apply to all stocks. But NADL has earned the right for me to buy it, and I tried it, to be fair, I tried buying it the day before too, and I was wrong for a morning spike. So I've had my eye on this stock for a while. This wasn't just me buying a random company out of the blue. I have been waiting for signs of a dip buy on NADL. If you've been reading my watch list every day, you would see that. And also, I was wrong buying it the previous day. Let me show you 2 days. So never feel that this is like an exact science. Here was a little fake out morning spike the previous day, and it went into a wall of sellers. But what a difference a day makes. Now today, or today for you guys, in the US, today it had a spike and it held it. And look at the range, was in the 180s. The previous spike failed and the range was in the 170s. So you have a clear little higher range and you have a spike, and now, it's spiking after hours and it's spiking late day. So that makes me think that this can bounce. How far can it bounce? I don't know. All I know is I'm looking at this, kind of coiling, curling pattern, and that tells me that, wait a minute, this support from back here, in the 160s, oh, wait a minute, look at this. It had support right in here, 163. Let's scroll over here. Where was support? Right in the 160s. So now this is support. So obviously there could be negative news overnight. That's the risk with any overnight position. But technically speaking, there is a ton of support now at 165. And for me, if it did not finish green today, I would have exited and lost 5 or 10 cents a share. Now I'm already up over 10 cents a share, nearly 20 cents a share after hours. And I don't know how far this thing can go. But we're in a speculative market. It already hit my first goal, so I took some profits. And now we'll see. Maybe I'll take profits at the same spot tomorrow. Maybe I'll take profits at a higher spot. Maybe I'll have to actually take losses. You never know 100% with these stocks. But if you do plan it, ideally with 2 plans, again, if I'm making sense, leave a comment just below and say, I have 2 plans, referring to you. I want you to have 2 plans and 2 goals. That is how you profit off these things. And it's not about necessarily chasing it. It's about figuring out, a good kind of responsible conservative entry. When I don't necessarily just want to buy it randomly in the 160s and think that 160 is going to hold, I don't mind buying this in the 180s rather than the 160s because now the stock has proven that A, it can spike, B, it can hold the majority of its spike, and C, it's probably the first green day of the pattern, which is very early in the long pattern. So it had to prove itself for me to give it patience. Otherwise, when I had this fake out spike, I mean, I was in and out within a few minutes because it couldn't prove itself. Now, the next day, it proves itself, so I'm back in. CBLI, just way too choppy, okay? And I don't mind missing too choppy. IDXG, I absolutely nailed the fact that this could spike more. I saw a bunch of people on social media and other chat rooms, and they're like, oh, Sykes doesn't know shit. This news isn't that important. Hey, dumbasses, it's not necessarily about how good the news is right now. If you get enough volume, if you get those early shorts, I'm grateful for every single person that thinks that I'm full of shit and they bet against me because they're opening the door to these massive short squeezes. Even if they were eventually right, guess what? If you're shorting this in the 3s or 350 and it goes to 4 or 450, you better be fucking rich and adding to your position, or you must cut losses quickly. Or you can be like the group of stubborn shorts that are out there and they just keep adding higher and higher and they keep tempting fate and they keep playing with fire. And actually they lost a lot on IDXG when it went supernova a few months ago. They lost a lot on DRYS. They lost a lot on PBMD. This group of stubborn shorts, I mean, they just almost risk blowing up on every single runner. It's kind of ridiculous. And that's not a good way to trade, I don't think. This is why I have the most millionaire students, not because we're the biggest bettors. It's because we trade safe. And we don't want to play with fire. We don't want stressful trading. When I'm dip buying IDXG, I wasn't even buying it at the highs at 330. I'm buying it 10% off its highs. When I'm buying NADL, I'm not buying it in the highs in the 3s. I'm buying it, at roughly a 50% drop off the highs on a potential first green day. So even though we're trading the most volatile stocks in the entire market, as you can see, I'm trading them very, very conservatively. I like dip buying. I like confirmations of when a stock, finishes green or looks like it's going to finish green. I'm not buying this on the morning of a potential first green day. A stock might spike and then fail, as it did the previous day, and then I had to exit. This time, I added to my position because it finished strongly and because, it was its first green day, and I'm excited to see what it can do tomorrow. Do I know 100% if it's going to spike more? No. I don't have inside information. I'm not psychic. I'm not manipulating the stock. I'm just playing these patterns and I'm playing the odds. And if you're not familiar with the patterns or the odds, I suggest you go through my now 4,700 plus video lesson library. It's roughly 400 hours. And you will see these same patterns again and again and again and again and again and again. And you just have to be ready to take advantage of them, whether you're buying or shorting. Okay? A lot of people are like, oh, Tim, you shouldn't have made fun of all the early shorts on CBLI the other day. I will make fun of the early shorts on CBLI because I don't want anybody learning those dumbass tactics from newbies who think that they're so smart. When a stock like this keeps going, you don't risk losing 50 cents or $1 or $2 a share on your short. What if this thing goes to 10? Okay? We're not all hugely rich where we can just add to our shorts forever. So be extra, extra careful and have two plans. Have a conservative plan and have an aggressive plan. And always, obviously, rule number one is be willing to cut losses quickly. Anyways, these are just a few patterns. I got to go take a nap. I'm excited to see what NADL can do tomorrow. It might be nothing. I don't know. I already have a nice profit. I've already locked in half. And also, for everybody else, please watch my trader checklist guide ASAP. When I finish the next 9 hours, it won't be free anymore. So enjoy it while you can. Also, the free webinar is on May 1st. Stephen Duck's challenge students get ready for April 26th. That's it for today. I'm losing my voice. Thank you. Leave a comment, by the way, if you understand what I'm saying with all this. I have two goals, or I have two plans. Whichever is fine, just so I know that you paid attention to this video lesson, because I like teaching, and I hope that you learn. Thank you.